Bitcoin just ripped past 122k and Ethereum just shattered 4,600. And yet, a month ago, every time I said ETH was heated here, people swore it was a fake pump. Well, the charts have a pretty savage way of settling arguments, right? But hey, no hard feelings, the market ended up proving it with the most straightforward chart, so that's okay for me. But I know a lot of people right now are feeling both pumped and still a little anxious. Pumped because of the new highs, of course, but anxious because history has its way of repeating itself. Just look at the charts here. Ethereum has tried to break 4K several times before, and each ended up as a one-day event, especially here. But yeah, we saw that in the past. So the big question is, will Ethereum keep rising? What's fundamentally different about this breakout this time compared to the past? And can you still buy ETH right now? That's the question everyone wants to know. So today I will start with one sentence. This time, this is totally different. The driving force has undergone a massive shift. Ethereum's rally has gone from insider hype and emotional vibes to a Wall Street-led, rock-solid strategic drive. Let's have a look. We need to get why the now makes sense by first grasping the past. Each of those failed attempts had their own fatal flaws. Let's talk about that and let's see why today it is different. So what happened here in February, March 2024? That wave was pure insider money. Here it was the meme coin frenzy. That wave was pure insider money playing with speculators, with no fresh external funds coming in. So the foundation was shaky, of course. It came and went like the tide. But then we had ETFs. And in May 2024, we had the spot ETH ETF. This was supposed to be a huge win, but the Ethereum ETF back then was incomplete. It gutted the core staking feature of ETH, meaning no native yields. For savvy institutional investors, a golden goose that doesn't lay eggs. That's just not appealing, right? So that's what happened there. And of course, the hype was short-lived. Then we had Trump with the Trump rally here at the end of 2024, beginning of 2025, with Trump's inauguration. We had an emotional boost, but Wall Street's eyes were still glued to Bitcoin clearer value story. Plus, there were ongoing debates about Ethereum tech roadmap and community governance. So no unified capital push formed. Stars weren't just aligned. And yeah, everything was so blurry. So those three pumps here all boiled down to the same issue. They lacked a strong, unified and sustainable buying rationale. So why do I say this time, this Ethereum bull market that we are living now has such a solid foundation this time? First, we had a healthy pullback. And then after digging in, I think it's mainly because Ethereum's base is getting stronger and stronger because of three major points. And one we just talked about. The first one is the regulatory certainty. We don't have risk anymore. With the stablecoin bill moving forward and the SEC quietly okaying that staking is not a security anymore, the policy risk hanging over institutions are being cleared away one by one. For compliance-obsessed Wall Street, this SEC acknowledging that staking is okay is the green light they needed to jump in. And then there is the ETF that we talked about. Led by BlackRock, institutions are pushing hard for a stackable Ethereum ETF. This let them hold ETH while earning 3% to 5% native yields. That's the real game changer here, the real weapon to unlock trillions from pensions and sovereign funds. It is getting priced in right now. I think that's what's happening here. The most part is from that. But still, there are potential risks. One is that the SEC's stance could still flip-flop, The other is that the stakeable ETF hasn't been approved yet. They are pushing for it, it's getting priced in, but we could see delays and that could dent the market sentiment. So we have to keep our eyes on that. But that's not the most important. The most important, the most crucial one, I think, is the grandeur of the narrative that we are seeing now with RWAs. financial on-chaining and RWAs, real-world assets, those tokenization processes have become industry-wide consensus. Whether it's stablecoins, US treasuries, or future securities tokenization, they all need the safest, the most decentralized settlement layer. Ethereum and its ecosystem are the top pick right now to carry that story. Everything is happening on the Ethereum blockchain right now. So that's for the macro level. And that's what will sustain this push. But that's not all. The emergence of companies like Bitmine gives us the most undeniable micro-level evidence. Bitmine, the MicroStrategy of the Ethereum world, as they say that for Sharplink too. But yeah, this company is chaired by Wall Street star analyst Tom Lee, so it's Wall Street, and they gobbled up over 830,000 ETH in just a month. That's nearly 1% of the ETH global supply, making it the world's largest publicly listed ETH treasury holder. What's their motive? Tom Lee said, and he laid it really crystal clear in interviews, they are betting on Ethereum as a major macro trade of the next decade. Plus, its huge potential as a foundation chain for finance and AI. He sees a really bright future for Ethereum. He also pitched Ethereum as ideal for treasury assets, thanks to its long-term value staking yields and scarcity. This Bitmine case, with billions in real dollars on the line, it tells us the institutional bull, it's not just slides in the PowerPoint anymore. It's happening for real, just what we needed after Sharplink, that we talked about just a few minutes ago and in the last videos. The stacking yields are exactly what institutions see as the core value beyond ETFs themselves. The financial on-chaining we are looking forward to is the sole reason top players are going all in, and it's Ethereum's strongest fundamental support. So, circling back to the original question, when you realize that behind the charts, it's no longer emotional retail traders, but deep pocket players like Bitmine, Sharplink, the Ether machine, with clear strategy and long-term vision, do you still worry that Ethereum's top is in? Especially with the ones buying ETFs. Their buying logic is worlds apart from ours. They embrace volatility and use market doubts to scoop up more at bargains when forces like this enter the market. The price floors just keep getting more solid. As for Ethereum's target price, of course, we first have to go through the ATH, but Tom Lee shared his ETH forecast, 7,000 to 1,500 by year end. Sure, Tom Lee, he is known as a classic, bull, whose prediction often gets slapped down, but I'm still super bullish on Ethereum, at least until 8,450, the target that we talked about in previous video. So that's still a 2x from today. So that's it for today's breakdown. What do you think? Drop your thoughts in the comments. Merci et au revoir.